welcome back to Brassionomics. There is a fiscal cliff looming. It's fiscal because it's financial, and it's a metaphorical cliff that people may be falling off of here soon. A lot of it does have to do with taxes. We're going to cover that and a little bit more. John Miller joins us, partner with GDM Private Financial Solutions. John, how are you?
Great. How are you today, Ben?
I'm good. I'm really good. It's always interesting to, especially in the accounting world. I'm sure you heard our monologue about the value people place on things like a mortgage, and taxes kind of tend to go the same route. A lot of people maybe want to do their own taxes. They go to very discount type of tax joint, maybe one where there's a Statue of Liberty jumping up and down in a mall.
I see it all the time, Ben, and unfortunately I see it from the wrong side.
Yeah.
It's usually after they've made the mistake of doing that, and it costs them tremendously.
And I will hit on this towards at the end of the show because I do want to get to the fiscal cliff, but that's one of the big things is people get so afraid of the cost of doing something right, and then they miss out on the opportunity that cost would have provided them.
Absolutely. In fact, I've seen people try to do their own tax return using some software, and I won't mention names because we all know the names.
Sure.
But I've seen people do their own tax return and then go, why do I owe so much money? Then they bring it to me. Now, I spent 7 years in college studying this stuff, getting a master's degree in taxation.
You, man.
Wow. No, it wasn't very exciting, really.
You must have gotten all the girls.
No, there was freshman and sophomore years, but later on, it was time to get serious. But anyways, it's just interesting to see the effects that it's had on people. I've had people make massive mistakes to the tune of double digits in the thousands and thousands of dollars. And, so you think, I'm going to go pick up at Costco my tax software for $79, but then it ends up costing you $7,000 to $10,000 because you're not aware of something. Or you go to one of these local vendors that has a Statue of Liberty jumping up and down, as you say, and they miss a treasury form. And that ends up costing you $10,000 a year and potentially some criminal penalties. And we've seen that in our practice. So it's really scary when you think about somebody spending a week or two and studying tax, and then they're thrown out and preparing tax returns or picking up software and doing it yourself. I think I'd have the same fear of somebody doing their own mortgage. And really, you got to think about they're doing their own mortgage if they're going to Walmart or PayPal.
Absolutely. So, okay, and a lot of people then, this is the big thing with taxes. A lot of people consider taxes, you're only looking in the rearview mirror. And I've talked with your partner, Boyce, about this a few times. It's just there's such a big difference between just doing your taxes on April 10th or whatnot versus understanding what your tax bill is going to look like and planning ahead for that. Is the fiscal cliff kind of seems to be another one of those places where if you get ahead of the game, it's as Buck says, it's more of a slope than a cliff.
Well, yeah, I think you're right on track. Are there things we can do between now and December 31st? Absolutely. And none of us drives through the rearview mirror. We always like to look through the windshield and we look at the dashboard
unless
just
you're
a
going
little
backwards,
bit.
I suppose.
And if I see I've got little gas remaining, I'm going to pull into Chevron and tank up. But at the end of the day, if I don't know that I need some gas in my car, and I hit April 15th and I owe a whole bunch of money because I didn't know that the sales tax deduction expires for Washington State residents, I'm in trouble. If I don't know that the AMT exemption has dropped, I'm in trouble. So if for no other reason we know that we need a little bit of extra funds to cover our tax bill this year, A, and then B, are there some planning things we can do? Absolutely. There's all kinds of things we can do between now and December 31st. But come April 15th, we have an IRA deduction, and that's about it. There isn't a whole lot to do when you look through that rearview mirror as opposed through the dashboard and the windshield.
So the reality here is that, and we'll get into the fiscal cliff again, but the reality is this is really these last 3 weeks of the year or 4 weeks of the year, this is really when you have the opportunity to take advantage of some tax planning versus waiting till even January 2nd.
That's right. It all ends at the new year. There's not much you can do. And truthfully, some of it's already over, and it's really just planning what do we need to do to cover things. But, if you're planning a large transaction like selling a home, if you're planning a large transaction like refinancing or selling a business or anything, there are lots of things to do, particularly in those arenas. Sometimes we're talking to people if they have a lot of gains in a stock, for example. Well, the capital gains rate goes up next year. it might be better to harvest that gain this year than next year and save yourself an additional 5%. Because it seems like some things won't be renewed in terms of what we call the Bush era tax cuts. And so we might as well take advantage of those now. Come next year, there's not a lot we can do. So tax planning for this year is not only going to affect 2012 tax returns, it's going to affect 2013 and forward as well.
Okay, so what are some of these big tax changes? You talked about the sales tax, which really is a Washington thing. What are some of the other big ones that people need to think about?
Well, I would like to just come back to the sales tax deduction because a lot of people are counting on it. You know, I had a friend call me up the other night and he says, I just panicked because I heard the sales tax deduction went away. Did it go away at the beginning of the year or is it going away in 2013? Because I bought a car this year. And I said, I'm sorry to tell you, it's gone. Will it be renewed or reinstated with the fiscal tax election? I don't know. AMT is a big thing.
Would that be a reason? Let's hit on that. Okay, you talk about a car, which maybe has $3,000, $4,000, $5,000 in taxes.
Yeah,
depending on the size car you buy. Is that a reason to potentially wait until after the new year to see if that deduction comes back? And I mean,
I don't think it's going to matter because the deduction, as we talk about it right now, is gone. If he reinstated, it'll be reinstated likely for 2012. I see that as
2012.
Yes,
so it would be reinstated going backwards.
Going backwards, right?
So you wouldn't even
So you might not even experience a loss, but at this point in time, we just don't see the two sides coming together. So we may not know what the new tax legislation is going to even look like until January. So I don't think that's really a reason to wait for buying a car or an RV or a boat. If that's what you want to do.
The weather would be the reason to
the weather,
that's
boat,
right.
That's right. I think another thing that's interesting that people need to know about, particularly in your business, is that mortgage insurance premiums have been deductible. That's gone. That's going away. And so mortgage interest is also on the table. That could affect real estate values. It could affect your business and my business and a lot of people's business. I don't see mortgage interest going away with the legislation, but it's something we need to be aware of.
Interestingly enough, though, people get really freaked out about it. The average, and we just did a whole piece on this, which you can see on our website. But the average person who makes $250,000, not average, the person who makes $250,000. Typical mortgage interest rate deduction is about $2,400 a year.
Right.
And so it's funny because people get, I pay $25,000 a year in interest. But when you really take that marginal deduction, it's probably not the end all be all. Of
right, it's an extra $400 in your pocket.
Yeah. And it's always interesting to see to see how sometimes people build it up to be more than it really is. I can't imagine that housing people go, gosh, you know what? I'm not getting this extra $2,000 in a tax deduction. I'm not buying a house. I'm out.
Right.
I have a hard time seeing that.
And people buy homes for all kinds of reasons. People in this market are underwater in their homes, but you don't see a lot of people saying, well, I'm going to walk away from my house. You buy a house for a different reason. It's not just tax.
Yeah, absolutely.
I think a big thing that's happening that most people aren't aware of is the AMT exemption is dropping. A lot of people don't know what AMT is, but it's the alternative minimum tax. And it's an alternative tax system that is mandatory. And most of us don't know about it because it doesn't affect us. But the fact of the matter is right now it affects a vast number of people and they don't know about it because, again, it expired at the beginning of 2012. So if you're an individual, a single individual taxpayer, it's going to start to affect you squarely if you're over about $48,000, $49,000 income. And if you're a married couple, it's going to be over $74,450 now. So if your combined income as a married couple starts to exceed, let's say $75,000, we'll just round it, you've got to start making some calculations and determining whether you have an alternative minimum tax situation, and that could raise your effective rate as a couple. Again, some things that you have to be aware of. Are there some planning tools? Absolutely. But they're only available through the end of the year.
So then is this, I guess, the question, we just have a couple minutes left. We're here with John Miller, partner with GDM Private Financial Solutions. What are some of those what are some of the planning tools that people have that they can implement quickly?
Well, let's take, for example, some things like expenses that you may have that you cover with after-tax dollars. There's ways of structuring, say, a business or some other things that you do. and expending those out of pre-tax money rather than post-tax money. That's one thing that can be done. I talked about harvesting some gains. So let's say you're sitting on a piece of real estate, or you're sitting on some stock options or stock or whatever, and potentially have a capital gain scenario. This is a good time to be looking at that. There's
sell,
huh? Yeah. There's all kinds of things. But I think it's really just individually specific. We have to look at the taxpayer, the things that are involved in their situation, evaluate the whole circumstance of what they have going on, and then apply the right types of things to manage that rate down.
Well, John, it would seem certainly that if people have questions on taxes, and since the taxes are one of the big parts of this fiscal cliff, so contacting somebody like you, to understand, as you said, it's personal.
Right.
You can't. It's not a big brush over every single American to go, hey, here's how we fix your taxes. It comes down to what you can do, and reaching out to you is a great idea, and you can do that, again, by going onto our Facebook page at Facebook/Brashenomics. Hey, when we come back, we're going to continue the conversation with John and Mr. Will Heaton, and we're going to discuss more about getting your mortgage at Walmart, or maybe the reasons you shouldn't. We'll be right back.